What's going on, everyone? My name is D. Anthony with Evolution Traders. In this video, I want to talk about and show you guys one thing that has helped me become a better trader overall. Now, there's a lot of things that you can focus on as a trader, as a day trader, as a scalper, no matter what asset class you're trading, whether you're trading futures, you're trading options, you're trading Forex, you're trading crypto, it doesn't really matter. But there's a few things that I think are very important, this being one of them. And that is back testing, right? So the market is coming to a close here in just about 4 to 5 minutes. And I like to start going over the potential patterns of my system and my strategy, and I start to mentally replay them. Because obviously, yes, I took some trades today. Maybe I missed some trades, and I want to see what potentially could I have done better, or what did I do right, and the market just, gave me my dose of medicine. So with that being said, we're going to backtest the 5-minute 20 SMA plays, and we're going to try to stay on the right side of the trend. So all in all, I've got the market open here on the screen. I've got the 20, the 200, and the 5 SMA. Okay, that's what's on the screen. I'm going to make some annotations and some drawings on the screen as we kind of go along, showing you guys where potentially something I could have done better, something I could have, maybe not done better. But what we're looking at here is if we look at the market open, we were already trading over the 5, 10, and 2 or 5, 20, and 200-day moving average. Okay, so if we're already trading over these demand zones, okay, I really don't have any sort of leg to kind of stand on. Okay, so I need to wait for some type of fresh setup. And if you notice here, okay, at 6:55 in the morning Pacific Standard Time, we do get a setup short. Now, I want to make something very, very clear. Okay, very, very clear. With the 200 period moving average being this close to the 20 period moving average, there's not a tremendous amount of space here. Okay, so I want to make something very clear. Unless you're a scalper that's looking for 3, 4, 5 points, this needs to come off of your playbook, right? This play needs to come off. Now, what play is that? If you are extremely tight, meaning you've got a flat 200, but you've got a rising 20 period moving average, why would you want to go short into a level of demand? Okay, again, unless you're an experienced scalper just looking for a few points or a few ticks, this is something you probably might want to stay away from. Now, our true short position is not going to really come into play until we close below this 200-day moving average. It's also going to be an active 20 SMA play. So what we would be looking for is a following candle to confirm that low, and then we want to be short. Makes sense? With that being said, we get a bounce off of this 200-day moving average. We get a close over the 20 period moving average, and we get a following candle to confirm, and we get a nice little push higher. I was actually involved in this trade early in the morning here. And again, I want to show you full transparency today. I was trading 3 and 2 mini contracts, and I was only looking for 4 to 5 points. That's it. Okay. Now you may be thinking to yourself, wow, that's nothing, right? But when you're trading these mini contracts and you're just looking for a quick scalp, it can be highly beneficial to your P&L as long as you're going to have the discipline to kind of wrap it up when you do go into the green, right? You don't want to sit there and you don't want to trade for 8 hours of the day. You don't want to catch FOMO. You don't want to lose a trade and then be revenge trading, trying to catch it back. So if you have some discipline and you can kind of stop yourself out, there's no problem in doing that. But again, for those of you guys who are trading a little bit smaller size, maybe we need a little bit bigger of a move. I want to show you guys where potentially you would have been taking profits. So this range on the reason why candle is 21 points. So what essentially we would be looking for is one of two things. We're looking for 21 points or 20 points close to it, or we're looking for half of that range. So that would be around 10, 11 points. If that is your MO, right? If you're looking for half the range, you're going to be scalping. What you're going to want to see over a series of trades is a higher win rate percentage, right? Because you're going to need that higher win rate percentage for when you do take those losses. So for every loss that you take, you're probably going to get back 2 winning trades. So we want to be over 70, over 75%. Now, again, the only way for you to know what your win rate percentage is go through a series of trades, 20 trades, 25 trades, 30 trades, and then kind of do the math and the homework on that and see where you can adjust some things, okay? So with that being said, if you look at the high price here of 18,203, within a matter of 10 minutes, we go to a price of 18,218, and then we push up to a price of 18,224. So in this particular situation, we got our 21 points almost to a T. However, if you were looking for more than likely it came all the way back down against you, and you probably, started to panic and maybe even sold out for a loss. Okay, again, same rules apply to this short position. This short position sets up, doesn't really confirm, but there's no reason to kind of jump it because we're still over this 200 period moving average. Remember, we need to break this 200 period moving average in order for that active 20 SMA play to be valid. And the only reason why it needs to break that 200 is just because the 200 is a very strong support, and we want to make sure we get through all supports before we start taking trades. The next trade to the long side sets up here. Okay, this would be your stop loss. Any close below that would be your stop loss. You could also, if you're playing smaller size, use a 200 as your max pain. Again, double bottom here on this 200. So with that being said, we're going to do the same thing. We're going to look at the range, 14 points. So either we're looking for close to 14 points, right? Minus slippage and minus fill times, and or looking for around 7 or 8 points, which is half of this candle's range. Now, I don't even need to do the math, but you can clearly see that we get a lot more than 14 points there. So you should be at this point in time 2 for 2. And also, if you are 2 for 2, depending on, even if you're trading small size, you should definitely get to a point where you're starting to think about hanging it up, right? Don't feel that you're going to miss out on more cash. Feel that you're going to protect what's already yours. Now, here's where things start to change, okay? So as the 200 or as the 20 period moving average becomes extended away from, away from this 200, the 20 here, 200 here, as we start to build this gap, we can maybe start to look at these short positions. We just have to be cautious. So again, once you start to get this short position set up here, you have to use one thing as your stop loss. You're going to need to use that prior swing high. That prior swing high is here. That's your max pain, and that's going to decide how many contracts you're going to trade. Now, this trade confirms and immediately bounces against you. Okay, this is where, and it actually goes above your reason why. But remember, we're going to ignore this above reason why for our max pain because we're going to use this prior swing high. We've already been kind of consolidating here, bumping our heads. So clearly, if we do break that, maybe there's a potential more for upside. Again, as long as we're staying below that prior swing high, maybe we've got more potential for the downside. So again, as we take that little bit of a bounce, we're feeling a little bit of heat there, but then we get this nice little breakdown. And again, it's not much. The low price here being 18,238 all the way down to 18,228. We're only looking at around 10 points. Now, the range of this candle is in fact 20 points. So on this particular setup here, this is a very, very tricky setup because one, we're going through a level, we're going through a period of consolidation, right? We're going through a period of consolidation. You can see that tight range. And if you are not looking to take half of the range or a quick scalp for a few points, this in fact does come back to wick you out, right? It wicks you out here. So if you're holding a short position, it starts to come back, it wicks you out here and then puts in a massive flush. How can we avoid something like this? Well, the only way that you can avoid something like this is, in my opinion, is if you're going to use the prior swing high as a stop, let's go ahead and use a closing candle. Instead of having a hard stop there, right? A hard stop where maybe, you're going to get wicked out, allow the candle to close, or we can set that stop loss maybe 4, 5, 6 points above, okay? So if we look at the high of that prior swing high, it was sitting at a price of 18,263, and we go up and wick to a price of 18,266. So maybe if we set our stop loss 5 points above, right? And the only reason why I'm saying 5 points, again, is because it's an easy number to remember. You can go 2 points, 3 points, but again, remember, if you were going 2 or 3 points, you would have been stopped out. So 4 points, 5 points, 6 points, 7 points, it doesn't really matter. But or you can use that close of that candle. Now, again, I know you're giving yourself more risk here, but this is the NASDAQ, okay? And that's the nature of the beast. It's the wild, wild west out here. This thing can whip around like an absolute animal. So again, the way you manage your risk is going to be the way that you manage your risk. Again, every trader is different. I'm just giving you my opinions on some things that sometimes I do to kind of help mitigate either a potential loss or give myself some more clarity and validation. But again, with that being said, we get another short setup, right? We get another short setup that happens here. Now, this is a small range candle. It's not much here. It's only a 10.5 point range. So either you're looking for 5 or 10 points on a quick scalp, or you can continue to hold that, maybe sell half size and hold that runner and use a stop loss as break even. And then you would be trying to target the next demand zone, which is this 200 period moving average. So you would be selling out somewhere in here, here, or here. Again, it does bounce back up to the 5, puts in a new low, bounces back up, and just kind of chops around a little bit down there. So with that being said, as we get into the close, right, that power hour, market did absolutely nothing. And this is where a trader can definitely hurt themselves, because of the fact that you're looking at plays go up, and then you're anticipating a move up higher, you're anticipating a move lower, you're anticipating a move higher, anticipating a move lower, and all you're really doing is just giving away all of the gains from here, all of the gains from here, all of the potential gains from here if you took this trade, or the potential gains from here. Now, also I want to cover this trade here, because in this particular situation, right, in this particular situation, again, because we have to cover all trades, this is an active 20 SMA play that does confirm. Now, if we look at the range of this candle, it's a 13-point range, and the high price is 18,258, and we go up to a price of 18,266. So again, this trade here only goes up 8 points. So if you're looking for a full range of the 13 points, it's going to get you. Okay, you're going to take a loss. Here's one thing that you can do. Okay, again, trading is not black or white. There's a huge gray area. Okay. Now, I know that we would all love for things, to be very systematic. If this does that, it does that. But you got to have a little bit of finesse, and you got to have a little bit of common sense as a human being to kind of tinker with things that may or may not be working. So with that being said, if we're looking at the prior swing high, right? If we're looking at this prior swing high, okay, what I need to see have happen is I need this prior swing high to get broken, backtest, go sideways, do something, and then I need to see it get confirmed. And that's going to be my entry. That type of confirmation there is going to avoid you maybe potentially taking this long position on that break of high of day and then getting trapped on the downturn, okay? Because for every trader that ignored this setup, there was a trader who went short here and sold down here. Okay, so there's always two sides to the trade. I'm just trying to give you guys some tips and my opinions on things that you can do to kind of help mitigate some of the risk, right? Again, don't take the short position here because we have major demand at that 200 right there. Maybe we avoid this long potential setup because we have not broken that high of day and then, back tested and confirmed a new high. Again, same thing here. We broke with active 20 SMA setup, but we really, don't take out the prior swing high. So there's no active setup there. We're just kind of bouncing our heads into, a brick wall. So again, maybe, a couple of these trades could have been avoided, right? These trades could have been avoided if we have some of that knowledge and some of that experience. So again, I'd be looking for something like this, right? Using the swing high as my stop, right? I'd be looking for something like this. I'd be looking for something like this off the bell. I'd be thinking about stopping myself out on the day if I did win one or two of these trades, right? Because why give back profits later here getting chopped up, here getting chopped up, and then trying to get lucky catching this potential downswing? Because again, we broke this prior swing high, and once we broke that swing low, and once we broke that swing low, we went right down and flushed to that demand zone and then chopped around into the close. So again, just giving you guys some tips. Hope you guys found this video helpful. If you did, make sure to like, comment, and subscribe, and I'll see all of you guys on the inside.